Hello everyone, welcome back to How to Trade. I'm Shane Vernier, and this is going to be the Pendulum Strategy Workshop. Now, the Pendulum is a price action trading strategy developed by Mario Singh. It's available exclusively in our How to Trade trading room. So if you're interested in what you see today and you want to learn how to trade this strategy or apply it to a market of your choice, then be sure to head on over to How to Trade. And you can see the full video. We have downloadable PDFs. I'm going to show you all that and how to find it here in just a second. A lot of news going on today. We're going to start with our workshop. We're going to run through how to trade the pendulum. I'm going to show you a few different examples of pendulum trades that I'm currently looking at and sort of the reason for the madness, the reason behind the strategy, and what exactly our goals and objectives are as we roll deeper into what I would call just the year of the strategy, 2025. We cover strategies now a lot. We talk about workshops and different ways to workshop not only ideas but strategies and apply them to the market. So if you have any questions at all on what I'm going over, now is the time to ask. I will be sure to answer everybody's question in due time. But as far as a complete market scan and maybe a few things that we need to be looking at, I will go ahead and cover those after we get done running through our pendulum price action trading workshop. So good to see everybody back. Bobby Bob, always a pleasure. Bobby, yes, sir. Good to see you. Yes, sir. I think that this is going to be an interesting day. There's a lot of news right now. Tuku, good to see you, Tuku. And I think that we're in the midst of a supercharged global geopolitical news cycle, the likes of which I'm not sure many of us have ever seen. I remember volatility. The crude oil and the gold volatility right now reminds me of 2011, right after I started. It reminds me of that. It's not quite as robust, but I'm telling you, every single night during the overnight, we're seeing big moves in crude. We're seeing big moves in gold. And typically that's indicative of markets that really don't know what anything's worth. And we have external market drivers. And right now it's geopolitics. It's Russia, Ukraine. It's Israel, Iran. That's what everybody's watching. So we're going to talk about that after we're done with the Pendulum Strategy Workshop, but I definitely want to get you guys up and running with a pendulum because it's a pretty good strategy. It's one of my favorites. I think that it can be really, really good. You can apply the pendulum strategy, but what you've got to have is you've got to have markets that aren't trending. So we're going to go ahead and go over exactly what it is now, and I'm going to show you how to trade it. If you have any questions, then I'll be sure to ask. Dave F19, good to see you, Dave. Welcome. I believe you're out of South Africa, if I'm not mistaken. So everybody's always welcome here. We have a global community. If you have any questions, like I said, be sure to ask. And I know I talk fast, so if you get lost, don't worry. I try to slow down and really hit the high points, but sometimes I get excited and I do talk fast. All right, everybody, let's go ahead and get rolling, get on with the program. So what we have for you today is our strategies section here inside of the How to Trade trading room, and we have several strategies here. These were put out. We put these out a while ago last year. They've been extremely popular. A lot of folks really trade these and believe in them deeply. The two that I did was the Pendulum Strategy and also the Bollinger W strategy. Now, the Bollinger W we'll cover some other time, and remember, if you want to trade any of these strategies, you head on over to Switch. You get yourself an account, open it up, get it up and running, and you'll have a lot of value in Switch. I'm going to be doing a Switch Markets live stream tomorrow. It's a Switch Markets workshop. I'm going to go over a few different things on MT5 and then also on TradingView and something called the let me see if I can get it, the Pine Connector, which is going to let you actually use your Switch Market accounts and MT5s and transfer everything into PineScript and trade it on TradingView. So I'm going to be watching that development. I'm looking forward to that live stream, but I've got to prep it. I've really got to prep it because I'm a ways out. I got to get up to speed on Pine Connector, and that's pretty much how I'm going to spend my afternoon. Usman, good to see you, Usman. All right, everybody, let's go ahead and get on with the program. Now, if you're inside of the trading room, I'm going to show you exactly where to find this stuff right here. You can see there's our live stream. But what you want to do when you're in the How to Trade trading room to find this stuff is you want to go ahead and you want to click on that graduation cap, and that's going to bring up the Trading Academy, and it's going to give you all these different videos. Today, we're going to be looking on the pendulum. Typically, you're going to go ahead and give that a click, and what happens is you're prompted with this screen. Once you get this screen, you just want to go ahead and click Move Me to a New Path, and you will be able to watch the video in its entirety. The Pendulum Strategy, as you can see, here it is. We've got a pretty nice tutorial here. It's only a few minutes long, about 6.5 minutes long. Definitely check it out. We've got learning resources. If you click there, you can download the PDF that gives you everything you need to know, and I'm going to go ahead and run through it. But this was definitely a fun video to make, and I hope you guys check it out if you're interested, that's for sure. What the pendulum is is the pendulum is a way to trade flat markets. Now, remember, markets only trend 30% of the time. 30% of the time. So if you're a trend trader and you're a hot shot and a home run hitter, that's what I always say. And a home run in baseball is when you hit the ball out of the park and then you trot around the bases and you get rewarded with a bunch of runs. Basically, I call it trying to take big profits. Typically, if you're going to be one of those traders that's taking big profits and you're looking for 1 to 3s, 1 to 4s, 1 to 5s, payoffs, risk versus rewards, then you're going to have to get trending markets. As I was taught when I first started trading, I said, wow, I mean, these some of these setups are really great. I mean, we could easily risk, $200 to look to make $1,000 or $1,200. And the first thing I was told was, hey, listen, if you're going to do that, you have to catch trends. And the trends don't blow all the time. It's like, think about it in these terms. In the old days, when they used to cross the oceans, they used clipper ships and they used sails. All right? Well, let me tell you, the wind doesn't blow all the time. And when the wind stops, those ships didn't move. And that's why it took months to cross the ocean. Well, here's the deal with trading. We can get into trading, and you can see big moves. Like take, for instance, this U.S. dollar, Canadian dollar. Well, you can see big moves. There's no question about it. That right there on a 4-hour chart, that's a trend. No question about it. That's a stiff downtrend. But look what's happened. The market is flat now. The market is absolutely flat here in this dollar CAD. It hasn't moved in about the last, 20 hours? Well, that's problematic. That's problematic in a lot of ways. And the biggest way that really hurts us is when the market doesn't have a direction anymore. We can't go in there and say, okay, well, I'm just going to go ahead and sell to follow the trend, and I'm going to look to get my 1 to 3s, 1 to 4s. It doesn't work that way. When the market flattens out, you're in big trouble, because if you're trading trends and you're trying to get in on retracements and follow the trend, or better yet, you're trying to get in on a move, say with an EMA, like a 920 crossover, a 5813 crossover, when those markets flatten out, you're in big trouble. Okay, so when we're momentum trading, when we're trying to get in on price action momentum, and the market stops, those strategies aren't going to work. And we've made videos on the EMAs, when not to trade the EMAs, when to trade the EMA crossovers. If you know when to trade those things and when the markets are volatile, then you have an opportunity. But if you don't, and you just go in there and say, okay, every minute of every day is the same, and you try to apply the same strategy, you're going to run into trouble. Now, the pendulum strategy is one of these that I had a lot of success with last year. I had a lot of success with it last summer. And the reason why was the markets were flat. They were dead. I always say they were dead as fried chicken. They were dead. The market was not moving. They were flatlining. And when they flatline, they don't have a direction. Now, if you're a trend trader, you can't trade markets like that. If you're a crossover trader, you can't trade like that. But if you're a rotational trader and you understand what rotation is and how to engage a flat market, you can make just as much money trading flat markets as you can trending markets. Now, believe me, if there's professionals out there watching this, and there's a couple of you, you love to stop by. Sometimes you steal from me. Sometimes you critique me. You're laughing. You're going to say, what are you talking about? I can make 50 times more on trends as I can trading flat markets. I go, yeah, if you know when to trade the trends. I know trend traders that hit 1 to 5s and 1 to 10s, and they lose money consistently. They'll sit around for months waiting for one trade. That's not good enough. I don't want that from any of you. I want you, let's just go, let me tell you what I want for you. I want you to be able to look at a market and say, okay, this thing's moving. Okay, let's trend trade. All right, let's play a crossover strategy. We are moving, we're trending. But when the market flattens out, and there's typically 2 ways that you can tell the market's flat. Number 1, the price bars typically, the ranges shrink. That's the first way. The second way is price action goes from directional to horizontal. Now, once we start going horizontal, we have to understand that we can't trade directionally anymore. It doesn't do us any good right here to take a long or a short here on this dollar CAD with respect to this range. Now, we could take a short if we wanted to. If we wanted to play a retracement level here, we could go short, but it's sort of up to the market to come in and really drive the market to where we want to go. And for me, I believe that's probably, that could be tough. That could be problematic right now. So what do? I get a strategy that lets me trade a flat market. I adjust my risk versus reward. I play very, very tight, but I also temper my expectations. I don't want to hit a 1 to 10 anymore. I don't care. Maybe I just want to hit a 1 to 1. Maybe I want to hit a 1 to 2. And I'm going to show you exactly how to do that with the pendulum. Remember, if you don't take anything else away from this stream, the markets trend only about 30% of the time. You've got to have something to do the other 70. The wind doesn't blow all the time. And if you've got a sailboat and you're trying to get from point A to point B and the wind stops, you're going to sit there until whatever happens. Maybe the wind starts again and maybe it doesn't. If you got the pendulum, think of the pendulum as like sticking your oars in the water. You start rowing, you might take you a while to get there, but you'll get there. I like the pendulum. It really helps us trade a lot of markets and do it very efficiently. Lewis, good to see you. Lewis, welcome. All right, everybody. This is sort of our learning resources. Be sure to check out that video, download the PDFs. It'll give you all the rules to the pendulum. Now, I like easy. I like easy. This is a preview of the PDF right here. It's going to give you the full breakdown of the rules and everything. I like easy. There's 3 things right there to identify a pendulum. 3. That's it. We've gone over the psychology. I told you why you need to be able to trade rotation. You can make a lot of money doing it, but you got to know when to do it and how to do it. This is one way to do it. All right, strategy rules are easy. Number 1, we're going to identify a support zone. That's just simple spike low or a swing low. That's it. If you're a smart money concept trader, you could call it a bullish liquidity sweep, whatever you want to call it. It is going to be just a swing low. An intermediate term, long. It's not. It could be a long term, but more than likely a short or an intermediate term bottom. That's it. That's a support zone. We're not getting fancy. There's no indicators in this. You don't need any indicators. All you have to do, realistically, is understand how to identify price action. If you can do that, you can trade it. So we've got no indicators in play. None. That's the first thing. Second thing, identify resistance as a swing high. That's easy. It's just a top, an upper spike, maybe a bearish liquidity sweep, whatever you want to call it. That's top side resistance. That's where the seller stepped in and said, this market's not going any higher. That's it. Third thing is we're going to calculate our trading range, resistance and support. And I'm going to give you a handy dandy little trick on how to do that. And then you don't even have, there is no math. There is no math involved. We're going to use our Fibonacci tool, and I'm going to show you how to set it up for the pendulum. Now, what are our trading rules? Trade execution, very simple. When we buy on a 10% bounce from our support zone. Price tests our support zone, it bounces 10%, we're long. Stop loss is going to be placed underneath our support level at a 1-to-1 risk versus reward ratio from our entry point. Now that's calculated by taking the difference between our buy entry and our support price point. Piece of cake. Absolute piece of cake. Profit targets are placed above the buy at 50% and 90% of the range. Okay? That's it. That's it. So on a sell, the opposite. We're going to go up. We're going to test the top. We're going to test the resistance zone, and then we're going to sell on a 10% pullback from resistance. Stop loss is placed above the resistance at a 1-to-1 ratio. The ratio is calculated by taking the difference between the resistance and sell entry price points. I'm going to show you that in a second. Personally, I've adapted that a little bit, but believe me, the rules are easy. Profit targets placed below the sell at 50 and 90% of the range. That's it. All right, let's go ahead and get in here and start breaking down some pendulum trades. Great Britain Pound USD. Now, one of the biggest things I'm always asked, and I mean it's every day. I probably get this question maybe 5 times a day on our YouTube channel, on all of our strategy videos. It's always the same. What time frame? What time frame? What time frame? I always say on a pendulum, you can trade it on any time frame you want. What I will not ruin any trader's creativity. I don't want to hamper your creativity. But if you're looking at a Forex pair, the ranges have to be big enough from resistance to support to really warrant a trade in the first place. 4-hour charts are pretty good for that. Now, if you wanted to be a 30-minute chart trader, you could do it. You could do it. Just be sure that you're doing it during the most active time. That'll be during that London-US overlap. If you can accomplish that, trade when you're at your most active, even though we're playing a flat market, then you can use a 30-minute or a 15-minute chart. Personally, I like 4 hours for Forex pairs. Now we're going to look at commodities and some other things. It's going to be a little bit different. 4-hour chart is a great place to start with a pendulum here, especially with Forex pairs. Now, I told you I was going to show you a little handy-dandy trick on how to do this real easy. Well, you got your Fibonacci retracement sequence right there. What you're going to want to do is you're going to want to go to settings. Now, the way that you can do this is relatively straightforward. I've already built a template. I'm going to go ahead and show it to you right now. It's essentially, instead of using 38, 50, 62, 78%, what you're going to do is you're going to use 0. That's going to be where we start. We're going to use 0.10, which is 10%, 50, 90, and 1. Now, the reason why we'll do that is because that 10% is going to be our entry point, 50% is our first profit target, 90% is our second profit target. You guys get it, right? And then 1 is going to be the bottom of that range. Now, if we're looking at a buy, potentially, it's just the opposite. The 90% is going to be your entry point, 50% and 10 are going to be your profit targets, and your 0 level is going to be the top of your range. Okay, let's go ahead and load up the pendulum and see exactly what we've got here. Now, the first thing that I want to do is I want to locate my support and resistance levels. Support and resistance levels are relatively straightforward. What we're looking for is just a basic range. That's it. That's all I want is a range. Swing high, swing low. First question, well, Shane, what about this one? Swing low, swing high? I'd say no. Why? Well, number one, this bar isn't formed yet, fully formed yet. Potentially, maybe, once it forms in the next 4 hours, if it closes down in here somewhere, okay, then we can have it there. Very easy. We're taking a look at obvious ranges. Obvious ranges. So what we want to do here is go to the top of our range. That's our spike high. That's our spike low. Now, what we've just set up is a pendulum trade. It really was that easy. So, by looking at our numbers, what can we say is our entry points? Okay, we know exactly what has to happen now for us to trade. To the sell side, we know that we need to take a test of 135.60, which is our swing high, and the price has to pull back 10% to 135.53. So, I'm going to go to my highlighter here. Price has to go up. It has to test this area, and then it's got to come back down. Once it does, we're going to be short there. Pretty straightforward, really. Now, I get a lot of questions on, Shane, does it have to hit it exactly? Given that the sort of the spirit of this system, this strategy, no. You don't have to hit it exactly. I would say if my top's 135.60 and we went to like 135.62 or 63, I'd probably be still looking to take that trade. If we went to 135, maybe 57, maybe. This is very tight, though. This is only about 7 pips. I probably would want to see at least a 135.59. Remember, nothing is, very rarely is anything exact in the markets. You're going to be looking at a proximity test more than likely. So I would give it about 3 pips to the top side here, and I probably would make it test it, 135.59. I'll give you that. But you want enough distance between your entry point and this top resistance zone so you don't get chopped up. You want to make sure that you don't get caught up on a breakout. We want to make sure that if we fail there, we get in on the short. Okay, so let's go ahead and build this trade out. I'm going to show you exactly how to execute it. So right here, that's your entry point. So if your entry point is right there at 0.9, where is your stop loss going to be? A couple ways to do it. Here's how you need to do it. The distance between your entry point, and that first profit target, that 50% profit target, that needs to be your stop loss. All right? So if you're looking at 135.53 and 135.26, that's about a 27 pip range. So you're looking at about 135.80. Something like that is going to be your stop loss. Now, why is that the case? Entry points right here. First profit target's a 1-to-1 ratio. It's 50%. It's 50% of this range. So this trade is a 1-to-1 trade looking for rotation back down to the center of our range. Simple. We get a test here. We sell. Profit target 1 is going to be right there, 50%. Profit target 2 is going to be right down there at 90%. Now, the creator of this strategy is Mario Singh. He's got a book. I think it's 17 proven strategies for price action, and that's great. A lot of people love these strategies. They trade them. So if you're looking at something like this, and you go, okay, should I be shooting for that this 90%, basically a 1-to-2 risk versus reward? I say you can do it. For me, a flat market, I know I've got a great chance to win a lot of trades. At that first 1-to-1. And I'm a big 1-to-1 trader, guys. You know me by now. I've been preaching it for 4 years that I've been on air, 3.5 years that I've been doing these live streams. 1-to-1 will keep you in the markets a long, long time. Now, there's a time to shoot for those big home runs. Flat markets are not one of those times. You want to take what's available. If it's available, take it. I like that idea right there. Okay, so let's go ahead and build the opposite part. Let's say price sort of stumbles here, and it goes down and it tests our 134.92 level. Let's say we get a test of like 134.91, something like that. If we bounce, Our 134.99 is going to be our entry point to the long. So what we want to be sure is that we're ready to go right there with our entry, something like that. So the bounce, we test this zone, we bounce back up, and then we're going to be officially long. Where's my stop loss going to be? 134.99 to 134.27. It's going to be about 134.63, 73, something like that. Right in that zone. That looks about right. So that's going to be your profit target. Very simple, guys. Absolutely very simple to do. What you're looking to do here is get in on price action that is not trending. And I know that sounds like, what do you mean, Shane? I mean, you don't want the market to move. That essentially is a pendulum trade. Price comes down, rejects it, bam, we're long. Price goes up, rejects it, bam, we're long. So what happens if price breaks? What if you break above support, or above resistance or below support? Then you just get the hell out of the way. That is the idea behind the 10% pullback. We just want to stay out of it. The idea is, okay, yeah, markets coil up and they get tight and then they break. Well, when they break, you want to make sure that you're not in the way. I do not want to hold shorts if this thing breaks out to the bull. And that's the idea behind this strategy. We're looking for flat markets that we can get in there and execute a trade on. This is a pretty good one right now. Great Britain pound USD moving left to right. I mean, it's a horizontal price action. I think you got a pretty good chance on a 4-hour time frame to hit this. How much money can you potentially make here? 27 pips. We're looking at about 27 pips trade. Okay, so let's say we played for $10 a pip. Was that $270? I still recommend risking between 1% and 3% maximum of your trading account. I will give you 5%. If you wanted to trade 7% using this strategy, I would say you can do it. And a lot of guys just laughed at me. Ladies and gentlemen that are pros just said that's way too big of a risk. It's a flat market. I like it. I'm going to give you 7%. It's risky. Personally, I think that you'd be smart to be playing about 3% of your account, 3, 4, 5. Yeah, I know if you trade 1% and 2% of your account, you need a lot of money to be able to do that. You need $100,000. I don't think anybody in the room has that, including me. I don't have $100,000 in the markets. Not yet, at least. I'm not interested in that. I can get by just fine with a lot less. So that's where we're at with the pendulum. I'm going to give you 1% to 7%. I would definitely caution you guys, though. I'd be looking at 3, 4, 5% of your account on any given trade. I think that's probably the best way to approach this. All right, now this is a good observation, Eli, in the live chat, YouTube live chat. The Great Britain pound Australian dollar moves too slow. Steve MC wants to play for $1,000 a pip. All right. We better be right, Steven. Oh, I got it. There was an old saying. That's a good one. I'm going to hit another market here in a second, but that's a good one right there. $1,000 a pip. I remember first biggest trade I ever took. I was trading about $100 a pip, rocked a big position in WTI crude oil, and I wanted to put on a 10 lot. I wanted to trade a 10 lot so bad, and so I got in there and banged it out. And I still remember my uncle going, "Whoa," and I go, "It's there," and he goes, "You better be right," just like that. You better be right. So if you're playing, Steve, if you're playing for $1,000 a pip, you better be right. You either got to be, you're playing that kind of load, you better be right or rich. That's all I got to say. And if you're not rich, you better be right. All right. There's an old, there's a million old sayings. We could just sit here and go over the old sayings all day. All right. Pretty much the same trade. But I do like this. Now, the reason why I focused on this and picked this one out, Eli, just kidding. That's all right, Steve. Hey, there's nothing wrong with it. A lot of folks play with that size. They just have the cash to do it. I would never, if you had the cash to do it and really weather a drawdown, I'm not against people playing for that kind of size. That's eventually where you want to be. That's the level you want to be at. But man, you got to have a lot of cash to trade that way. That's for sure. All right, Great Britain pound Australian dollar. Love the 4-hour charts still. I think the 4x 4-hour charts are pretty good. So we have a slow market. And a slow market is absolutely fantastic because on the pendulum, it's user-friendly. You just find your range. Swing low right here. That's your support zone. That's your little value area down there. There's your swing high, and now we're coming off. This is good stuff. You build your trade. You go, okay, what do we got here? Simple. There's your grid. You're looking for a test and a bounce and a buy. You're looking for a test, a bounce, and a sell. Or, a test, a failure, and a sell. Easy. Very, very easy. Very, very easy. So I'm looking at something like this. The markets that you really should be looking at are something like the Euro Great Britain pound. Things that don't trend. Now this right here is a bad, this one right here is a bad idea. Why? Because it's trending. 4-hour chart, it's trending. You don't want any market that's on the move like that. You want to stay out of with the pendulum. You want flat price action. So how would I choose a market to apply this to right now, this minute? I'd say, well, U.S. equities, NASDAQ's kind of up about 1%. The S&P 500 up about 0.5%. U.S. 30's up about 0.5%. Let's pull a U.S. 30 chart. Now, here's the thing. You're sort of moving during that U.S. session. Let's go down to, say, a 30-minute chart. And this is what I would recommend highly if, in fact, you're going to be trading U.S. equities using the pendulum. What you want is flat price action going into the close. You want flat price action going into the close. And if you get that, you could trade that last hour and a half or 90 minutes of the U.S. session, maybe the last 2 hours, with just realistically, if you get a swing high and a swing low during the U.S. session, you could do it. This is a great example of how you could have got hurt, though. So let's say you had a spike high right there and a spike low. And that would be your pendulum trade. You're looking to go up and you're looking to come back. But take a look. Kept you out of trouble. Kept you out of trouble. Even if you went up and failed right here, you didn't come back down and hit your 90%. That's why the pendulum can be very good, because if it breaks, if the market breaks and runs, there's no sweat off your back. You're out. You're not in. That's the point. I mean, think of that as your safety. That 10% pullback is your safety. That keeps you out of these trend days, because the last thing you want to do, and believe me, a lot of folks did this. A lot of folks did this today, day traders especially. They sat there and they looked at what happened. And they said, okay, what's going on here in the U.S. markets? There's your opening bell, ding, ding. All right, that's your opening bell right there. There's your top. That's your A period top. A lot of traders dug in and they sold the A period top thinking they were going to get a little price action. Guess what? You didn't get it. You got slammed out of the box. And if you're still holding shorts, you're in big trouble. You're in prey mode, praying that thing comes back down to you. And guess what? It typically doesn't happen. Once you reach that end of it, it's already over. The pendulum keeps you out of that. So let's see if we can find a flat dead market. You say, Shane, how do you pick a market to trade the pendulum on? And I go, okay, we want something that's flat and dead. Great Britain pound USD only down about 0.14%. That's a prime candidate. We already covered that one. What else? Japanese yen's on the move. We don't want to trade that. Euro USD kind of on the move. We don't want to trade that. Dollar CAD? Oh, yeah. Flat, basically. Let's have a look. Do I want to do this on a 30-minute chart with the US dollar, Canadian dollar? We can build it. We can do it. As a matter of fact, the other traders right here, they were already working a pendulum. From that swing low right there to that swing high, they're already in it to the short. Could you still work it? Maybe on a 30-minute. I would be careful this time of day. I think it's too late to do that. But something like a 4-hour? Okay, what do we got on a 4-hour now? Got a flat market dynamic. You got a nice big sell-off and then a retracement, spike low, spike high. What else do you got? It's a viable trading opportunity. I would love to sell here. 137.35, you get a test of 42, then you're going to look to sell on the downside. Pretty good trade. If the price really comes off from here down to about that 136.81, about 40 pips away, then you'll have a chance. You just got to fail down there at 75, 136.75, get the bounce, and then you're long. That's it. That's the pendulum. Find flat markets. If you see a day where the U.S. equities are flat, you can build the pendulum using a 30-minute chart during the U.S. session. You can do that. Don't do it during the overnight, though. You don't want that. The liquidity's not there, and you'll see price get swept high or low. All right, guys. I promised you guys a quick market scan and look at a few of the things that I'm looking at. We've seen some really huge news breaking. I feel bad about not being able to cover a lot of the news as it happens, because there's some things out there that are incredibly concerning, I would say, but also are going to bring a tremendous amount of volatility to us. They just are. In my view, what we're going to talk about now is probably going to set the table for the next several days of trade. It feels to me like something big is on the horizon. And by something big, I mean, well, potentially escalations, big escalations, the kind of escalations that you just don't want to see. And we're starting to see them. We're starting to see them develop. And right now, I really want to take a look at two news stories that are going to shake the markets probably for the rest of the week, if not the rest of the year. And I think that I'm not speaking in hushed tones trying to scare anybody. I'm not trying to scare anybody. But we need to recognize what's happening here. If you saw the Switch Markets email, then you can definitely, you already know about the Israel-Iran situation, which is taking a back burner to this stuff right here today. This is big. We had a Crimea bridge reopens after Ukraine says it carried out underwater explosion. This is one of the biggest bridges you're going to find. Goes across the Black Sea. It's a huge pipeline. This was huge, but also Russia's Pearl Harbor, audacious drone strike where about, I believe, 40% of the nuclear, the Russian Air Force nuclear delivery systems were knocked offline. Really incredible pictures coming out of that region. And I think that it's going to be, I think your peace deal's gone. And so when we start seeing a peace deal off the table, we thought that we were going to get a peace deal. I did. I thought they'd have peace by now. I thought the U.S. interests in the Ukraine were going to make sure that the escalations did die down and that we would see relative normality there in the region. And it just isn't happening. It just isn't happening. We've saw escalation. Those are big escalations. The strike inside of Russia was about, either 4,000 miles or 4,000 kilometers. And it was really a sophisticated strike on huge nuclear targets. Okay, that's a major escalation. So when we see escalations, the first thing everybody should think as a trader is, okay, what's happening? Well, you got to look at gold. You got to look at safe haven. So right here, when we pull up our gold chart, you can see on the monthly we're up about 1.96%, but I want everybody to be very, very careful with gold to the short. Now, we've had a lot of sellers step in front of 3,500 and really put an intermediate term lid on this market. I've been really outspoken about that top right there is the most important thing. 3,500 even is the most important level in gold. But here's the other thing you got to remember. And believe me, these patterns, especially when you see them setting up on like a monthly, there's your bullish move. And what else do you have? It's a bullish pennant. Compression in the gold market is no joke. When we see the market become compressed, meaning you've got a nice big, sort of a big range there back in April. May was sort of dead for gold. We traded really tight to it is a doji. It's not what I would call it. It is a doji. That signals compression. The buyers can't win and the sellers can't win. And everybody's sort of fighting it out, wondering what about 3,500? This is a delicate situation if you're a gold trader. If you're holding shorts, I understand. I get it. The rotation is there. You can make money to the short side. But once this breaks, once 3,500 breaks, we go to 4,000. And given that type of scenario, what's happening with the Ukraine and Russia, you've got to sort of figure that there's pretty good chance that we're going to run at 3,500 given that geopolitical uncertainty. That's really all we can say about it. So do I want to buy or do I want to sell? I would much rather buy. I would much rather buy. I think that's definitely the play. The only question is where can we find a level? And of course, I got to change my Fibonacci's back. So just 1 second. So you'd want to pull back ideally down here about 38%. You got that last month. See that? That's a beautiful trade. The institutional money stepped in right. We had that trade idea. Stepped in right at that level, and definitely it sent it higher. So something like this, that's like a year trade. A lot of folks made enough to cover their year on that trade. What can we do now? Well, earlier today I was a bidder from 38% on the daily. It worked out pretty well. Realistically, it worked out pretty well. It was a nice little trade. There's a nice spike low there, spike high off of today's retracement. You can see right there off of 38%. That was a beautiful trade. Very good stuff. I liked it. Very delicate, though. It wasn't there. It didn't hang around 38% very long. It was down and it was gone, especially if you're trading the futures contracts. Important to realize we have rolled to August gold futures. We are now trading Augie. We're trading the August contract. That means that we're looking at gold with more of a deferred type of a mindset. We're pricing gold futures right now, what they're going to be in August. So 33.76 is what the futures contract's going for. The spot gold contract that you guys trade, the XAU USD, is at 33.52. All right, that's sort of a little bit of a float there. They call that basis in agriculture. That's a hard concept. We're not going to get into that today. But that pullback to 38% is indicative of a bull market. I want to be long. I don't want to be short. Any chance I get really to take the long, I'm going to be doing that. So keep a close eye on the 38% level. If you see a surprise peace deal or something, then gold will crash. There's no question about it. But today, nice pullback. And you go, Shane, with all the news, shouldn't it have went up? And I'd say it did go up. Take a look at yesterday, 2.81%. That priced in that Israel-Iran tensions over the weekend, and then it also priced in what somebody knew about big strikes coming out of Russia-Ukraine. A lot of folks are ringing the warning bells about World War III right now. You're technically already in World War III. U.S. assets, there's no question that U.S. and NATO assets are in the Ukraine. I'm not telling anybody anything they don't already know. And the real question is how does Russia retaliate after one of the biggest strikes they've been hit with in a long time? I got a feeling it's going to be huge and it's going to be bold. And in my view, this is going to escalate, and we're kind of just waiting for Article 5 of NATO to be triggered. It's ominous. It's dark. Full disclosure, this analyst right here figured we would have a peace deal by now, especially after Trump was elected. Has not happened. Has not happened. There's a lot of folks committed to war there. You want to be on the long side of the gold market, believe me. As far as silver goes, silver was a big mover and a shaker yesterday. The keys to the silver market, silver's tough. But this is a great illustration of market dynamics in the finest, really easy stuff, guys. This is not, we draw these pictures, and I know most of them are in hindsight, but, we only stream 30 minutes a day. And what do you have? Compression, 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 break. And that was the break of all breaks, and that's because of the news cycle yesterday. That's about a 5.3% break. That's a huge move, but that's a textbook breakout after just compression, 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 compression. It's sideways. That's left to right. If you're trading pendulums here, you're probably doing pretty good on a 4-hour time frame. So that breakout right there was a monster, and then you saw today's pullback. Today's pullback is basically the same as gold. 38% almost beautifully, and you're still headed higher. Now remember, 3,500 is your big key number to the top side in gold. Right now, $35 even is the big top side key number in silver, and that sets up about 100 to 1 gold-silver ratio. Be very careful. If you're trading silver, especially if you're thinking of buying in at 35, you're going to see some chop there. And we're going to look for a real similar formation to this right in front of 35. And if we get it, then we'll have an opportunity potentially to play the break above 35. And we'll be covering silver a lot in the near future. All right, one last one. Great Britain pound, Japanese yen. All right, we'll go ahead and look at the guppy, and then I'm going to sign off. Still got some trading to do today. Okay, here's a good look at the guppy. Trend day up. Okay, first thing we're looking at is trend day up. So, Shane, do you want to buy or sell? And I say, well, we could definitely build Fibonacci's right here and dial in a sell from the back end of our golden zone right there at 195. You could take that trade. You could sell that, but you're only looking for about 25 pips, something like that, maybe 30 pips. I would be very careful holding counter trend, especially intraday trades here. But that's a pretty good trade location to the short. Now, if you want to wait and go short up there at 195.50, you can. You could probably shoot for more money up there as well. But 134.97-ish, that 194.97 or 195 even, that's a pretty darn good shorting zone. Now, if I don't want to go short and I want to follow intraday pressure, what would I do? Dial it down. Always adjust your time frames. Adjust your time frames to meet your goals. If that top holds, I love this area right down here as downside support. 194, 194 even. You're looking at something like 10, 194, 194, 10. Pretty damn good, pretty darn good zone right there. So you could definitely be looking to attack that to the bull. That would be my bid. I'd probably be bidding 194.09s, something like that. That's going to give you a pretty good area. Now, what is that? We call that commonality, remember? And that's when the levels line up on different time frames, and that's really one of the bread and butter aspects of what I like to do with fractal geometry and Fibonacci retracements. Hope that helps. All right, everybody, I'm going to go ahead and sign off. I hope you enjoyed today's workshop. The pendulum is a good one. It's a good one. I don't know that I would be trading the pendulum today, though. The price action's wild. We're all over the map. We've got trending markets. There are intraday trends out there that are developing. I don't know what happens to stocks. I don't know what happens to risk assets. I do like gold to the top side, even though you're down today. That pullback bid was just fantastic. It's one of those that you can just hit and hit and hit and hit and keep hitting. As far as WTI crude oil goes, up about 2% on the futures contract. U.S. oil's up about 1.12%. A lot going on, and we just have to be cognizant of exactly how to trade the action and not get caught up in the minutia of what's happening on short time frames. See the bigger picture, understand the news cycle. Russia-Ukraine just went to the top of our, they talk about threat escalation ladders. They just went to the top of our list of market drivers. We started out with Israel-Iran. Now we went Russia-Ukraine. Why? Because everybody anticipates a big-time response out of Russia. A big one. And it's coming, believe me. So once it happens, these markets will go absolutely crazy again. I expect commentary out of Trump this afternoon. It's going to be an interesting type of a week. All right, everybody, I got a Switch Markets workshop tomorrow. I'll be showing it in the How to Trade trading room, so be sure to check it out there, or you can check it out over at Switch Markets on YouTube. We're going to go ahead and do that. I'll answer any questions you have, and we're going to go over a few different concepts with MT5 and also this new Pine Connector software that is going to be offered to Switch Markets clients. The idea over there is to deliver value. So we're going to be doing live streams at Switch. We're going to be doing Pine Connectors. We're going to be doing algo builder stuff. We're doing all sorts of stuff that can get you in these markets and give you an opportunity to trade. All right, Eli, thank you. And Usman, thank you. Thanks, everybody, for tuning in. If you have any questions at all, be sure to swing on over to the howtotrade.com trading room. Send me a private message and ask me whatever you'd like. Also, on these live streams, you can just leave a comment below if you do have a question. Potentially, if I have an answer, I'll give it to you. Remember, I only have a couple rules on my live streams. Number one, if it makes money, it's the right answer. Number two, if I don't know something, I'm not going to blow sunshine off your backside. I'm going to tell you that I don't know. That's all there is to it. I'm sorry. I don't sit around pretending that I know everything, because I don't, but I know a few things. And I know 3,500 in gold's coming back around. And I also know that Russia-Ukraine is probably the catalyst to take us there. Lewis, absolutely, Lewis. Always a pleasure. Bobby, Bob, always a pleasure, guys. Now, listen, it's important. Listen to me. Watch your risk. Watch your risk for the next couple days. Now, we're going to preview NFP. We're going to do all that stuff later this week. We'll be back with NFP Live, and I'm not even thinking about NFP right now. Be careful with your risk. These markets look like they're loading up for a big move. We just got to wait and see where it is. Eyes on the prize. Stops down, leverage in check. Don't go crazy right now. Be careful with your risk exposure. This is a very dangerous time in the financial markets. All right, guys. That being said, trade the action well, and we'll talk soon. See ya.